Hi, Matt McAleer, Director of Equity Strategies, October 4th, just after the close. For all the headlines and news this week, it's interesting to see that we went out, within a stone's throw of where we closed last Friday. NASDAQ up slightly, S&P and Dow down. A lot of volatility this week. That showed up in some of the options pricing. We saw total put-call ratio get elevated this week. Not extreme, but elevated. That almost went hand in hand with another buy signal we got on from our Quant Work on Wednesday. So that was interesting that we've gotten two buy signals from our Quant Work in the last 6 or 7 trading sessions. Remember back in August 27th, we got a string of 3 days with buy signals. What this is telling you, what we're seeing day to day, is real extremes in the fear and greed. And while we try to take advantage of that in the short term, in a trading strategy, in the longer term, it's important to sometimes step back and see what's really going on. So what I'm doing today is sharing 3 charts with you. They're point and figure charts, and they're generated from one of our research partners, Dorsey Wright, and one of our crackerjack traders, Shea Slawson, put together these charts and highlighted and identified the trading pattern and range in S&P 500 as represented by SPY, the Dow as represented by DIA, the diamonds, and the Qs, NASDAQ 100. What you're going to notice as these slides come up is we've been in a congested period with some pros, some cons. One of the pros that you cannot ignore, and you've heard me mention this over the past 6 months or so, is we're seeing higher lows on each pullback in these indexes. That normally tells us that supply or selling is slowing down. That doesn't mean that these lows are going to hold, but while they do, it gives us a weight of evidence that some positive things are taking place in the indexes. Headlines are meant to create cause, concern, panic, draw viewing to a newscast, whether it's a financial newscast or a nightly newscast. What we like to do is step back and see what's really happening. And what we're seeing is the market is digesting all these headlines, month after month, quarter after quarter. We don't want to be, and you've heard me say this numerous times, we don't want to be too bullish here or too bearish. What you're seeing is traders and investors getting very bullish and bearish. And that's represented in not only the CBOE and the put-call ratios that we see, but also in the AAII sentiment readings. You saw bullish advisors. Now these are advisors, not traders or investors or retail. Advisors are down close to bullish, the bullish number down close to 20% again. Normal average mid-30s or so. That 20 is the lowest it's been since mid-December. That's a lot of folks very negative out there. So we need to always play, if things are a little rocky, has the market and have traders already positioned for that? And if so, is there some upside if we get any good news? We try not to stay ultra bullish or ultra bearish. We try to see what's available, see where the risk is, see where the reward is, size our positions appropriately, and take advantage of what the market gives us. One thing you know, it'll stay interesting. Always remember, you can reach out to us via email or phone call if you want to share some thoughts and ideas on either your portfolio or what you're seeing in the market. We try to stay transparent with what we're trading, and hoping that these videos are helpful. Have a great weekend.